How's it going, my good old friends of YouTube? It's Stas here. Welcome back to another video. So like you all saw in the title, yup, you read it right. We're going to break down the Fed meeting, a bunch of notes I have from this Fed meeting, Jerome Powell, interest rates, inflation, and of course, we're going to go over tapering. When the heck are we going to see tapering in this market? Who knows? Well, you might know at the end of this video, or if you watched the meeting already, you probably already know, but I'm going to sum it up in this very short video today, and of course, we're going to break down how the stock market's reacting, so sit back, relax, take a sip of your coffee. You're going to need it for this video. Smash the like button, check out my Patreon down below, and let's get right into the video. And before we even talk about what happened, inflation, tapering, all that good stuff, let's see what the stock market is doing. The S&P is up 1%. The NASDAQ 100 is up about 0.7%. The Dow's up 1.1%. And we have the Russell, the small caps, crushing it. The Russell up about 1.6%, with the VIX down $10. The dollar, I believe, is weakening. At least the last time I checked, it was weakening. So the markets are reacting pretty nicely to this, right? And I'm going to break down the overall price action of the markets in my next video today. So make sure you guys subscribe, because I want to focus mostly on the Fed meeting today. I don't want to have this video run too long. So let's get right into it, right? The Federal Reserve today, Wednesday, cleared the way to reduce its monthly bond purchases soon, quote unquote. That's when they're going to do it. Soon. So we're not seeing anything as of now, and they signaled interest rate increases may follow more quickly than expected, with 9 of the 18 U.S. central bank policymakers projecting borrowing costs will need to rise in 2022. And if you guys stay till the end of the video, we'll go over some charts regarding this, and you'll see how they expect the different FOMC members, how they expect interest rates to pan out over the next couple of years. So make sure you guys stick throughout this video. And the actions represent a hawkish tilt by a central bank that sees inflation running this year at 4.2%, more than double its target rate, and is positioning itself to act against it. So you guys know when Jerome Powell pops on the mic, he has, all the cameras, all the eyes on him in, the financial world, us, retail investors, the institutional investors, everybody's looking at him, and he always has the same intro. The Fed is looking to use all their tools, yada, yada, yada. He says the same crap every single time, and the key things from this meeting are, and they've been the same as of late, they kept interest rates near zero, and they kept bond purchases the same. Yes, you heard that right. They kept bond purchases the same, and we will go over in a second here a question. I think it was the first or second question he got asked regarding tapering, and that's very interesting how he answered that. And he went over how jobs growth slowed in August, unemployment rate was 5.2% in August, and I believe the average growth of jobs the past 3-4 months are roughly 750,000. He started going over that. So the fact that August was a rough month, I'm guessing that is a huge reason as to why tapering isn't happening right now. No joke, guys. I mean, if we had a big month of job increase, August, tapering might be coming sooner than expected, and the FOMC predicts the unemployment rate to continue to improve, which is a good sign, and the path of the economy continues to depend on the course of the virus. Progress on vaccinations will likely continue to reduce the effects of the public health crisis on the economy, but risks to the economic outlook remain. Of course, there's always risks to the economic outlook, no matter what the heck is going on. So let's go over inflation, right? They believe inflation will moderate in the next few months as it has been elevated as of late. Blaming inflation, he blames inflation. He's been doing this on supply bottlenecks, and he's been saying that coined term, what is it? I'm blanking out right now, guys. Crap. Inflation is transitory. Transitory, guys. He's still saying inflation is transitory, which I've said before. I'm not too sure about that. I think inflation might be here longer than most people expect. And the median inflation estimate falls. It fell from 4.2% this year to 2.2% next year. And I'm not sure if that's too realistic, but We'll look at some charts in a little bit, and we'll see what they believe inflation is going to be in the next coming years. If sustained higher inflation becomes a concern, which I believe it will, of course, they'd use their tools, whatever the heck that means. They'd probably fight it by increasing rates. That's it's gonna be a bit rocky if that were to happen. And of course, inflation is looking a bit rough right now, so maybe they do that to fight inflation. And they're going to keep rates where they are until, of course, the labor market improves and inflation stabilizes. And everybody was looking at the tapering, right? That is what people know is coming sooner than an inflation or an interest rate spike. And when he got asked a good question about the taper, he answered, and in terms of, when they're going to taper, what will determine when they'll taper, he said, the test for beginning our taper is we achieve substantial further progress on our goals of inflation and maximum employment. So it really comes down to inflation and maximum employment when it comes to the FOMC, Jerome Powell, determining on when and how aggressively they're going to taper. And we appear to have achieved more than substantial further progress for inflation. At least that's what they think. These are not my words. This is what Jerome Powell said, and I'm sure you guys saw it if you watched the video, right? That part of the test is achieved, in my view, is what Jerome Powell said. Maximum employment isn't quite there. Once they meet their tests of inflation and maximum employment, they would consider tapering as soon as the next meeting, which I'm assuming is about a month from now, early November as well. I believe they have one. And they'll look at the tests and broader markets, of course, to see if they are going to taper. So if we get better jobs numbers, more people employed, inflation starts to, dim down a little bit, which I'm not sure will happen, but let's say hypothetically here, that is where he believes it'll be the right thing to do when it comes, or the right time to start tapering. And that could happen as soon as October, November. That's pretty soon from now, literally a month and a half away. So that is what I really got, the key points. Of course, we can go on and on and on about more things, but again, I want to keep this video short. Those are the key points that I saw and wrote down from what I saw when it comes to the meeting and a little bit of the Q&A there. So let's pop up Safari quickly. we're about 7 minutes in, so let's pop this up and see some of the different projections from the different FOMC members here. So here, what you guys are looking at is the distribution of participants' projections for PCE inflation 2021 to 2024 and over the longer run. So now 2021, we have most projections around 4 to 4.5%. Makes sense. 2022, they see, mostly 1.7 to 3%, with most people thinking 2 to 2.5%. 2023, they think PC inflation is going to be 1.9 to 2.4%. And then 2024, they're looking at 1.9 to about 2.4% as well. And longer run, which who the heck knows what that means, but longer run, they're looking at roughly 2%, which is the goal historically, or at least as of late, for inflation when it comes to the Federal Reserve. And honestly, I think it's more than 4% right now, because we already know they don't really calculate everything in that inflation number, but that's a whole different topic for a whole different video. But those are some projections from the FOMC members, and I want to show you guys, let's see here. If I scroll down a bit, can I find the interest rate one? That's important. This is it right here. Distribution of participants' judgments of the midpoint of the appropriate target rate for the Fed funds rate. So this is for the next couple of years. 2021, all of them are between 0.13 and 0.37% for the Fed funds rate. Next year, 2022, a lot of them are spread between 0.38, 0.62, 0.63 to 0.87. So that's a little bit of a rate hike in 2022, which many people might think that's sooner than expected. I don't know. I think we need that rate hike, but it's going to hurt the markets, no doubt about it. And then 2023, look at this. Most people are in the 1.13 to 1.37 camp, and then we have some people at 1.63 to 1.87. I can't even imagine. It's crazy. I can't imagine interest rates 1.5 to 2%. That just seems like it just seems foreign to me because it's been zero for so long. But they believe in 2023, it's going to start coming up. And then look at this, 2024, a lot of people are around 2.13 to 2.37%. Most of them are, which is a healthy rate. It really is, guys. And then longer run, most people are at about 2.38 to 2.62. And, will it get there? I don't know. A lot of people argue that when the Fed's going to increase rates like they did back in 2018, it's going to shock the markets, and then they're going to go right back to zero because they don't want to cause a collapse pretty much. So we'll see. That's pretty much it, guys. I hope you all enjoyed the video. If you did, smash the like button, drop me a comment, subscribe if you guys want to see more content for me, and let me know your thoughts. Please let me know your thoughts in the comments, and check out my Patreon if you guys want my buys, sells, call-outs, morning update videos, more access to me, private Discord access, plus more. All of that's on Patreon, link down below. And you guys can get $30 from M1 Finance, 2 stocks from Webull, up to $1,600. Those are free. Link down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Peace out, guys.